David, we saw the rand coming under pressure again on Friday afternoon after China raised those reserve requirements for the second time this year. Do you think it was a bit of an overreaction because we have settled back a little bit this morning?
Stephen, it's difficult to say if it's an overreaction. I think there's a lot of negativity in the market at the moment. You know, Alicia mentioned the story around Greece that just won't go away, the bearish nature that the way the euro is trading, and the fact that China is trying to slow down the credit demand, which implies that they're trying to slow down their economy broadly, and the impact that will have on commodities. I don't think the reaction was, in fact, I think the reaction was quite mute. The rand only went from about 766 up to about 770. And subsequent to that, you know, we've seen the rand fairly flat. So I don't think it was an overreaction at all, no.
Well, you mentioned Greece, and of course we know that the European Union ministers are meeting again to discuss Greece. Very little coming out of Thursday's meeting of those ministers. I mean, do you think the market really needs some solid detail before they're satisfied that Greece isn't going to be a big problem for the European Union?
Well, I think the issue is slightly broader than that, Stephen. You know, if there's no plan for Greece, what happens if the problem spreads into Spain and Portugal and other peripheral countries? And in fact, on a global basis, everybody's got a high budget deficit at this point. In fact, we carry a budget deficit of close to 8%. America's over 10%. The UK is over 10%. So what are the implications for nations that have very high budget deficits going forward? And what's the impact of that likely to be on the global economy? So that's the concern at the moment. And stories about Dubai World and Greece and so on, you know, just don't help the sentiment at all. And that's really the kind of mindset that the market is caught up in.
Do you think the future sustainability of the European Union as it stands now is also being called into question? I see that in Germany some polls have been calling for Greece to be expelled from the European Union.
Yeah, I mean, I think you're going to get that kind of reaction, perhaps from the broader public. You know, when one nation, sovereign nation, is seen to carry the can for the broader Europe. But we have to remember that the basis for the euro or the European Union as such was a political one, really based on the events of the First World War, Second World War. That's going to be very difficult to break down. The economic impact, of course, is less or is more difficult to sort of quantify, and you are going to get that type of reaction from the man in the street. But I think in the politicians' mindset, that is absolutely not, you know, that's not a practical solution at all.
Of course, we have the Chinese New Year holidays at the moment, also a public holiday in the United States today. So do you think that's going to keep trade fairly quiet and potentially more volatile on the currency front?
I think very, very quiet, you know, Stephen. The US holidays is creating quiet conditions. I think we also domestically are waiting for the budget, and that's keeping the market fairly subdued at this point in time. And we'll just have to wait to see what sort of direction materializes as the week progresses.
David, just looking ahead to the budget on Wednesday, what would you be looking for in the budget? I mean, I see there are calls in the newspapers from some quarters again for the rand to be pegged against the dollar. Do you think that's going to be something that's going to be brought up in the budget?
Yeah, you know, the minister or the presidency announced on Friday that they're going to announce something about the rand, and of course that's making the market a little bit nervous. A peg is not a practical solution at all. It's fine when your currency is strengthening and you know, you have to acquire reserves to try and keep it at a weaker level, and that's a very expensive game on its own, particularly on those reserves when you're earning 0%. But of course, when your currency is weakening and you have to protect that band, it becomes a very, very expensive exercise because you deplete your reserves rather quickly. And South Africa's got its own history of that, and we've borne the brunt of that in the past, and we built up a negative reserve situation of plus 20 billion or more than $20 billion. So a peg is not a practical solution. What a possible solution might be to weaken the rand, who knows? And hopefully we'll get a little bit of direction or news coming out of the budget.
How about more direction on the Reserve Bank's mandate and inflation targeting? This has been alluded to. It seems that the minister is going to say something about that. What would you expect? Would you expect that it's just a work in progress and further details maybe follow in the mini budget in October?
Yeah, I think the problem for me, Stephen, is it's been a work in progress now for many months, you know, and if we don't get some direction, if we don't get some direct policy statements, the ratings that we carry as far as international investors are going to be concerned are going to be impacted because there's just simply too much uncertainty. I think recently the centre of government, if you like, has lost a little bit of power based on what's happened around President Zuma, and I think it would not be the prudent thing to do for the finance minister not to announce anything or to give some further clarity as to the process, because uncertainty in the markets is the worst thing, you know, and the market is looking for direction now as far as the budget deficit is concerned, tax revenues are concerned, and either we must put these things to bed now, the debate around the Reserve Bank and the Rand, or we actually have to get a little bit more direction as far as the government is concerned.
Well, David, a little earlier you mentioned South Africa with a budget deficit of around 8%. Is that the number you're going to be looking for in the budget? Do you think it could have been revised upwards or downwards?
Yeah, I think the minister is in a really tough predicament, but not unlike anywhere else in the world. You know, I think tax revenues will remain subdued, although the economy does look set to pick up a little bit of steam, which perhaps will help those revenues. But you know, on the other side of the balance sheet, we have a huge infrastructure spending program going on, and you know, you can't just turn the taps off on those. So it's really a difficult place to be. Of course, he doesn't really want to raise taxes because that has a direct economic impact. So really, what they're going to do about this issue, that's what the markets will be focusing on, and I suggest that this is a very, very important budget to keep one's eye on, Stephen.